Hello, everyone. Welcome to Gesmer Updegrove's Angel Investor Discussion here at Gesmer Updegrove. My name is John Cohan. I'm a corporate partner here, helping companies in their emerging businesses to obtain financing, their general corporate matters, as well as eventually and hopefully an exit for those companies. With us today are a few panelists that are in fact angel investors, and I'd like to start off by introducing Anton.
Morning, John. My name is Anton Khinchuk. I am an IT professional with 28 years experience. I've been an entrepreneur most of my career, and I have worked with Gesmer for the past 10 years. My interest in new innovation, new technology is part of the main driver for my interest in entrepreneurship.
Great, thanks. Mike?
I'm Mike Sweet. I'm a serial entrepreneur. My background's mostly in education technology and outsourced software development. Love the early stage ecosystem. I love to help startups find their way, get access to resources, give back. I've had a few different exits, and it's just a lot of fun to see others get their chance as well.
Great. Steve?
John, thanks for having me. My name is Steve Walsh. I run a company called Hands on Angel here in Boston, and it's an ecosystem that connects founders and funders to different funding sources. I also back those founders. I've been fortunate to be involved in over 67 startups over the last 7 years, helping them raise over $1 billion in capital and 9 exits to date. So super excited to be here today, John.
So let me start with, you guys all come from different backgrounds, different interests, different companies. Are there specific industries that any one of you are looking to when you're making your angel investments, or is it more kind of passion-driven in a particular vertical? Steve, I'll start with you.
So I like to say I like to stay in my swim lanes, because when I get out of my lane, bad things happen. So for me, it's not so much industries, it's I'll call it sectors. So business to business, either B2B or B2B2C. My entire background, my whole career has been business to business, sales and operations. So I can't tell you how to grow a consumer D2C femtech brand. I just can't. It's not where I've spent my time. But if you give me a couple of entrepreneurs that might be able to get a SaaS platform, whether it's in fintech, sports tech, or health tech, and get to 10 paying customers, maybe 5 or 10,000 a month in revenue, I know what the path is to get them from that to $1 million here in revenue. And I know what that takes from a capital perspective, sales, growth, et cetera.
And how early in that process do you want to get involved? I mean, you talked about bringing it from 10,000 to $1 million.
Yep.
In your view, what's the runway look like for something like that?
So what I tell people is I'm not a whiteboard and a dream guy. I can't tell you what to build. You have to have a product, and it might be an early version of the product, and that's fine. And you have to have someone that's willing to pay $1 for that product before I pay attention. Like what I tell people is, please tell me the only person using your product's not your brother-in-law. Right. So I'm looking for after that, but pre-Series A, like if they're already talking to traditional venture firms, whether it's here or in California or New York, that's too late for me. So I want to be post-friends and family, pre-Series A.
Gotcha. Anton, how about you? What sort of drives you, and what are some of your passions that have led to the investments that you've made?
So most of my career I've spent building teams and building technology, and so like Steve, I'd like to come in after a proof of concept, after there is a paying customer and a product. I'm industry agnostic, but I'm more interested in the story, the background, the greater impact that the product or the service can provide. I'm always interested in the founder themselves or the team of founders. Have gone through that process myself. I understand the challenges and the pains, tribulations, and the reward. And sometimes the reward isn't there. But having that firsthand experience really enables me to do a better job, I think, providing guidance, providing some sort of assistance, and then validating the team and kind of pointing out where the strengths and weaknesses are in their technology strategy.
Mike, let me ask you, you talked about, in the intro that you like to help people and sort of see them get to that end game. But from the beginning, what sort of strikes you as, I really want to be involved with this company?
Well, I'd say over time I've gotten a little more disciplined and have a little better criteria. Honestly, early on, it was sort of spray and pray and just kind of find people I liked and thought that they had a chance and thought that I was smart, and I'm sure if I help and give you money, we'll be off to the races. And now a little more experience under the belt. Now I really look for something that I want to roll up my sleeves into, that I actually want to open up my network to, that I want to help and really, do more than just give them a little bit of capital. So for me, there's things that I think I can actually add value to, not just sort of spitball, but actually people and understanding of markets that they are going to need. And so for me, I have ed tech background. So if I know about how that ecosystem works and how it buys, I'm more likely to be involved because I actually really want to get my hands, not lots of time, but I want to lean against it. And that's one of my biggest things is I think when you're attracting capital, finding people that are actually going to give more than that first check and really be a helpful resource like Steve.
Probably where you can bring the most value too, because you've built ed tech companies and you've exited them, so you know what not to do, which is almost as important as what to do.
I know some of the things not to do, and over time, I think that I, want to use that scar tissue to help others.
I think the other thing is you can actually relate to these founders because you've made the mistakes probably along the way, right?
100%.
You can show them, hey, I've made the mistakes too, but here's how we can course correct based on your experience, right?
Exactly. Or you just share your ideas and you become more humble and you say, hey, this is what I tried.
Exactly.
It didn't work. It could work for you now, different time, different place, but at least you have another piece of information to go on.
Helping them avoid the pitfalls could be a piece of advice that they probably wouldn't have thought of if they didn't have the leadership or the mentorship we provide.
Anton, don't you also think that it's important to find founders that are coachable and are willing to take that feedback? Like one of my big filters for me has been when I meet somebody and all they want to do is tell me that they don't need my help and that they're smarter than me, I'm like, what are we doing here? Like, you have to be coachable. And if someone's not, and I don't expect anyone to do anything that I tell them to do. What I say is, all I ask is you listen, you take it in and decide how it applies to your business. But if at the end of the day, all we're going to do is argue about how smart you are and how stupid I am, then this isn't going to work.
Very good point. Yeah. I think Woody Allen had this line that you don't have to be the smartest person in the room, but number 10 isn't that bad either. So something similar to that. I want the founders to be bright, intelligent, and to your point, very coachable and be able to take advice. And more importantly, just absorb the advice and really implement it when it's appropriate.
Yeah, and their ability to filter from multiple sources and see how they integrate that. They hear from you, they hear from me, they hear from others, they come back, they try it all on for size. But they're not just swinging around because you said it or I said it, but they're giving it a thoughtful examination.
Mike, you mentioned the word humble. I think humility is an awesome quality to have as a founder, and it's something I really look for. And it's like, I don't know what I'm looking for until I see it, but when I see it, I know it. And humility is one of those things that I think is a really good quality for
humility has to be part of the recipe of why they're doing what they're doing.
Yeah, I mean, look, I think sometimes it's helpful for them to get a few battle scars, right?
Absolutely.
I mean, you got to trip along the way before you're going to learn something. That's like probably true in anything that you do. So I think it's really valuable. But to be able to have somebody as a backstop or a safety net, if you will, that's been through it and that has the ability to help, I think is huge. And Steve, there's a great point about, you got to be coachable. You got to be willing to listen to this stuff, right? Because if you're not, as you say, we're sort of wasting time here. Why? That's way too valuable.
It's not just externally with investors, it's internally in your own teams. Like, I look for a founder that can surround themselves with people in their team to challenge them, people that have different skill sets than they do, because that's how you're going to build a company. If everybody on the team looks like them and talks like them and has the same background, you're going to have a tough time growing. You just are.
Right, and I mean, to build on that, you reach a point whether it's 2, 3, 5 million in revenue. Up until that point, you can be one of the best at every function in the business, but at that point, you better really quickly figure out that you're not going to be good enough, and you need to figure out how do you find talent that can take that business to the next 10, 20, 30 million in revenue.
The ability to pivot, because they're going to have to have the ability to pivot multiple times depending on the direction of where the startup goes, where the business goes, where the customers are coming from. So in conjunction to not only being able to listen, but to be able to pivot and make the right decisions at the time and then take guidance as to how to readjust is also critical.
How you assess risk, and is it any different than what institutional investors are assessing risk on? Now, to even further add to this, we look at the teams, we look at the tech, we look at, do they have revenue? Do you view your assessment of risk less stringent than, say, a venture capitalist would view it? Or are you guys probably think you're around the same magnitude of measurement on that.
I look at my risk less on my capital. I mean, obviously I'm worried about that, but I mean, early stage investing is incredibly risky, period, right?
Yeah.
So I don't know how we really make it a less risky thing. I mean, there are ways, right? I mean, even second time successful founders only succeed at twice the rate as first time founders,
Sure.
right? And they're still failing 4 out of 5 times, right? So for me, when I think about it, it's more about, is this a project that I want to be involved in? I don't want to just dabble, put money in, and then walk away from this experience 6 or 12 months later because I can't stand the entrepreneur, or because I don't believe in the project anymore, or because whatever. So for me, they are way more, they should be, the better VCs are way more disciplined. Their funnel, they're looking at 1,000, 2,000, 5,000 things, filtering it down, and then only investing in 5, 10, 15 things a year, right? So no, I'm not doing that. But for me, it's time, and is it a project that I want to spend time on at this point is the biggest risk that I see.
We are taking on probably even more risk because we're so early. But one of the reasons, and Mike said it well, like, I wouldn't have gotten into this not assuming that risk. Like, this is big risk, big reward. And we understand that coming in. We know that for every 10 we invest in, 5 are going to 0. But it's the other 5 at some sort of a multiple that are going to repay the ones that didn't. And the other thing is, when you get in as early as we do, there is nothing like getting involved with a founder early and seeing them through that entire life cycle to exit. And when you see your founder win and they get to that closing table, regardless of whether it's a 5x, 10x, or 1,000x, there's no better feeling. That you were there almost on day one with them. And most VCs never get that because they come in at the seed or the Series A. They don't know that founder when it was just 2 co-founders at a table with a whiteboard. And you do. So that's a really good feeling.
We're the canaries in the cave, and then being at that table when the acquisition is happening, that path and coming along with the entrepreneur and getting from point A to that point is very euphoric. And I think that's one of the main drivers for at least why I do what I do.
Yeah, I agree with that, and I think that, the grit, right? I mean, that is the word that I do look for it. I look for people who are going to stick it out, who are going to be capital efficient, who are going to be really, not try to put a lot of smoke in the room, really get down to business and get from those first few clients up to 50 clients, and they're going to do whatever it takes. They're not going to raise a ton of money, build a big team, and some people have huge success at that, obviously, but those are not the ones that I've typically focused on.
So on that point, I've run into in my career a number of founders that come to me and they want advice, but they've only got the toe in the water. They're not really 100% committed, right? Because they've got their day job and they've got this other thing that they want to do, and they want to see if that works. And if it does, then they'll keep going. How many times how often do you get that with different founders and you say, hey, time out. You're either in or you're out, right?
So the ability to gauge where they're at is very critical because the level of interest, the level of energy and input that I would provide depends on how far they're in.
Yeah.
And I think the earlier you're able to identify that and communicate that to them, that I'm going to give you as much advice as appropriate, gauging on where you are in your journey. If you have that sense that they might not have what it takes to go the full distance, be measured with your advice and your time.
But I don't think it's true that you have to be all in to be a successful entrepreneur. I think that's a myth right? I think that some people actually go all in when they don't have the resources or actually enough market understanding, and they go all in and it's sort of a cowboy mentality.
Yeah.
And so I think that, but eventually you do need to go pretty all in, right? For sure. So I think people often underestimate how much time they think they're special. They're going to get there faster with less money. And so they're undercapitalized and they don't really give the opportunity enough of a chance of success. So I don't mind that they may be kind of wading into the waters, but it does, exactly to Anton's point, it's going to dictate how heavy I go in with them.
Steve, how often do you find founders that to be an awakening moment for them, that they are not fully aware of what it really takes? How often have you run across that situation with founders?
So it's for me, I have a phrase I use a lot. It's the difference between a wantrepreneur and an entrepreneur. Wantrepreneurs talk about doing things. Entrepreneurs do things. Wantrepreneurs do everything on a whiteboard. Entrepreneurs just go build a bunch of stuff and show it to a bunch of people. And then all of a sudden, 5 of them say, I'll buy that. I'll pay money for that. Like, that's the difference. And that's when you know. Wantrepreneurs have massive 5-year projections and they can tell me what's going to happen. Entrepreneurs go, I don't have any projections, but this is what I've done the last 6 months, and here's the revenue. That's the That's when I know, at least.
Yeah, I mean, for me, what I see is a lot of entrepreneurs have too much focus on the product or the service and too little focus on the market. And they're not out there actually, pretty crude expression, but getting their teeth kicked in by people saying, no, your baby isn't really that pretty, right? Like, yeah, I mean, I know your mom loves it, but seriously, this isn't what we need right now. And they're willing to pivot on that advice. So for me, that's a big part of what I'm seeing is how much are they right at the coalface? Are they actually with the market? And the number of people who, no matter how much I'll help them get to those situations, oh, I got to get my baby prettier before I go out and talk to people. And I'm like, that is a very, very bad sign that I never see work out well.
I had 4 founders, college roommates, build the best MVP I've ever seen in my life. And I was like, this is unbelievable. You guys must have a ton of revenue. And I said, how much money did you put into this? He goes, oh, 800,000. I go, what? He goes, each of us put 200,000 of our own money in. I go, great, you must have amazing customers. And they go, we haven't launched yet. And I go, I'm sorry? I said, you haven't shown it to anybody? He goes, yeah. I go, that's the dumbest thing I've ever heard. And he's like, they're going to love it. I go, based on who? The only people you've shown it to is the 4 of you. I go, I would have rather you spent 40 grand, build an awful version of this and shown it to 200 people. Sometimes it's backwards. The thesis is backwards.
Yeah, if you build it, they will come. It's the oldest, right? And I mean, it's so easy to go out and get people, and especially those of us as advisors, we can find your target buyer. We can get you in front of them, right?
Exactly.
Between our networks, and we can get you feedback, and at least we're not just throwing stuff against the wall. And that's a waste of capital, a waste of time. But for some people, the entrepreneurs, it feels good. It feels like, hey, oh my gosh, I built, I got something tangible, and it's like, yeah, but not in the bank, right? And
We
no
call
testimonials.
We call it we're doing a deal with ourselves, right?
You almost need to harvest that energy and refocus it and maybe spread it across the board. Mike, you mentioned a little bit something about that the entrepreneurs, either they're not thinking about the business or is thinking of the customer. What I have come across, a lot of the entrepreneurs that I talk to, they are more product people rather than business people.
Yeah.
And that's a challenge that, or maybe a learning curve that a lot of entrepreneurs are a little slow to adopt. They're so focused on their baby, like you said, and they're not really thinking of, to your point, Steve, with those 4 founders, they're not thinking of what the customer really wants. This is almost like building their ideal and wishing that customers will share in that vision.
What's the most valuable sort of non-monetary support that you can provide to founders and entrepreneurs?
Yeah, I mean, I think we've been talking about sales and go-to-market. For me, if I can open doors at potential buyers or channel partners that are going to be interesting here and get as much feedback as quickly as possible from that market, as cheaply as possible, that to me is something that they can spend way, way too long spinning on.
So for me, I think there's 2 things. One is I think money is the least valuable thing I'll ever give these founders. I think one of the most valuable is what I like to call kind candor. I am not the guy that tells them that they're great every day. Sometimes I'm the person that tells them that, your deck is actually twice as long as it should be. You're really not ready to raise, or you're raising too much, or your valuation's too high. And I think that's the opposite of what the industry typically tells them, because nobody wants to miss a deal and nobody wants to offend anybody. Then I come along as the contrarian and say, the reason you're not raising is your deck actually stinks, and we should redo it. And you're raising too much or from the wrong people. And I think, and it's not to make them feel bad, it's actually to help them go faster. Because I think when you give them kind candor and you give them that honest feedback, it helps them be better. So that's the first thing. And the second thing was, and I tell every one of my founders this, when I invest in you, my network now becomes your network. And the best part about doing business with me is I'm not old, I'm a little more mature in my career. Well, old dudes know a lot of stuff and a lot of people, and my network is pretty vast and it's global, and there's hundreds of investors and thousands of connections that you can tap into, and I implore you to do that. And because my job when I become a partner of yours as an investor is to make you wildly successful.
Yeah, that goes back to your, are they coachable, right?
Absolutely.
Are they listening? I mean, I had the same issue, in what I do. I mean, I'm the bad news bear, right? I have to be that. I'm trained to do that, right? But they have to be willing to at least listen to it. They may not act on it, but at least they're listening, right?
Absolutely.
Which is key. Let me ask this, and sort of, we're going to talk a little bit about regrets for a minute here. Right? Everything is good and happy, but I want to talk about sort of what do we regret from the past. So if there's one investment you can think of that you passed on and that you might regret now?
I think there's a little bit of regret in both investments that I passed on and the investments that I made. So I think it's a little hard to pinpoint one. I think the regret, maybe a uniform regret, is misreading the intent of the entrepreneur. That would be maybe an overarching regret rather than the specific. I think I've made that multiple times, and I continue to learn and try to fine tune that so that the regret is maybe less expensive.
I wish I started this 10 or 20 years ago, because I realized that, being part of helping others build their dream is a passion of mine. And I just wish, and now that I do it, I say to my wife all the time, I don't want to do anything else the rest of my life, because this is really what I was meant to do. And I just wish I had started earlier.
So not every regret is the thing that you could have got in at $1 million valuation that went to $1 billion, right? So for me, I have a good friend that I've gotten to know, ed tech entrepreneur. When I first met him 12 years ago, I didn't invest, and wasn't the biggest exit ever, but he did get there a couple of years ago, and I had spent a lot of time coaching and working with him and supporting him, and it would have been nice to have money in that deal as well. So that was one where the challenge there is that relationship built over several years, and so when he was raising, I didn't know him well enough necessarily to want to back that.
So the regret was sort of a learning lesson, I guess,
Yeah.
right? Yeah, I got you. So there have been great discussions here, lots of kernels of knowledge, but I want to kind of end it with sort of our parting wisdom from each one of you. There's one thing that the viewers can take away here, from this entire session. Anton, what's your thought on that?
So when I was a founder, I was putting in 15, 16-hour days, and I was looking forward to the next day because it was it's so exciting and so interesting. So prioritizing your time and knowing where to focus is probably the best advice that I can give, because your time is obviously the most valuable asset, and to focus on the things that really have the greatest return on your investment. The ability to gauge that comes with experience, but really prioritizing your time is the advice that I would give.
The one thing I tell my founders all the time is just never stop. Things are going to pivot, things are going to change, it's going to be tough, but never stop. And I always use this phrase with my sons and my founders, which is try, fail, learn, grow, and then just repeat the cycle and just never stop. That to me, the founders that win understand that, and that's just how they live their life.
And building on that, I love the expression fail first attempt in learning, right? So, and getting those learning lessons down to the least amount of money possible. Some people take a lot of money to learn a very few number of lessons. So how fast can I learn those lessons, and efficient can I do it with cash? And then the other thing is, we've been talking about surrounding yourself with a really great group of advisors and really leveraging their willingness to help you. Find people who are really going to help you and tap in and take their advice. Like Steve said, we all have pretty expansive networks, and you don't want to spend time or money on solving problems that other people are not high value problems to solve in this venture, right? Exactly. So that's something I see people spin their wheels on.
That's great. Can I have you guys come back, I hope?
Anytime.
We'd love to have you. So thank you to my entire panel. This has been great. Thank you, viewers, for watching us here at the Gesmer Updegrove Angel Investment Discussion Group. So thank you for watching. Please feel free to follow us on social media. You can like, comment, or subscribe. And please go to our website, Gesmer.com.